Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 11th. Michael Boutros here with you this morning. Hey, Rohan, great to see you. DJK, uh, uh, Jay, great to see you guys all in the room. So we are at an interesting juncture. We've gotten a pullback in the dollar plays. So the dollar with a little bit of a pullback after that rally. We're still holding the monthly rather opening range. Weekly opening ranges are intact. Quick run through today. We'll hit DXY, Euro, Peso, Gold, Sterling, Dollar Yen, Dollar CAD with a picture perfect reversal last night, guys, or yesterday rather. I hope you guys caught that. We'll take a look at the Kiwi levels. Not so crazy about them, but we're still holding near resistance. And finally, we wrap up with the SPX. Any other questions? Yep, Rohan, I got you. Any other questions? As always, feel free to throw them on the message board. I am a little constrained on time today, guys, so we're going to try to keep a quick pace. Here's DXY as we open up the week. And here's what we looked like into the open of Sunday. So I told you guys this really near-term pitchfork was too early to work with. Looks like it's giving out really long, really quick. Here's the longer-term picture on the weekly charts. We are still trading just above that major critical support confluence just on a slope standpoint, and we're looking for some conviction here. So the original focus was on a recovery off this major resistance, and what I told you guys yesterday in the webinar was 93.88, 93.92. That's still key resistance, former key support. Last week's high is right there. We're still trading right in this range. So look, could it make another strike into the slope? Yeah, but at the end of the day, now you're still marking that consecutive day decline again. You're coming into support. Not a good area to initiate new shorts if you're looking for new exposure. Here's DXY on the daily. So I believe someone in this room or yesterday in the webinar pointed out this momentum trigger in the DXY right there. Monthly opening range is set right above support at the 2018 open, right below resistance at that former slope we've been following from 2017, 2018. So DXY certainly, really, really tight range bound, right above support, right below resistance. If we take more closer near-term or front, it's at a near-term consolidation just above channel support. So again, ideal scenario play, you get some sort of corrective move, some sort of bounce failure somewhere in this range to play the resumption. All things held constant, we are now poised to mark an outside day reversal. It's way too early. Obviously, we haven't even opened up the US trade session. But if that were to happen, we suggest again, look for this coil to continue, more lateral movement. All right, here's the intraday chart. So I don't want you to focus on that pitchfork anymore. It was kind of a shot in the dark there to see if it holds. A lot of times I'll throw these slopes on here. You're not really giving credence to them. You're kind of just seeing if that slope ends up offering some sort of pivot in price. And you got it here. Again, even to the start of the week, you kind of tested it again here. I don't know what that is. I don't know if I want to call that a break. You're still holding lateral support at 93.10, 93.21. That's the focus right now. All right, that's the focus right now. So this might end up being some sort of modified slope. It could end up being, a lot of different formations, but for now, don't focus on this slope. You can work with something like this. I was looking at it earlier today, just deadening the slope a little bit, which will highlight the same levels we're looking at. Okay, this is your opening range high for the month, objective 94.01, topside break. You're looking for 94.27, 94.65. That's the bigger zone. If we buckle sub 93.10, specifically on a close basis, yeah, I think you risk another stab at those lows. And Rohan, you're right. Seems messy. I'm with you. Yeah, it's a little messy. It's a little messy. The daily charts, I think, are what are really stellar across the board, essentially. Whether it's euro, dollar, gold, sterling. On the daily charts, I think it's a little bit more clear. Intraday, yeah, let's let the range play out a little bit. Let the ranges play out a little bit. Ideal scenario, you get into a steeper dive here. Maybe you fail at the lower parallel, but you close 93.10 or above if this thing's going to bounce. But Lack of conviction here in DXY, falling apart a little bit. So not surprisingly, that's number one. Not surprisingly, number two, here's Euro. A very similar scenario. You know, that pitchfork that we had on early on, I told you guys again, it's way too early. No idea if the slope is in play. Same thing on Euro, okay? We didn't throw it on the report here, but I threw it on here in the webinar yesterday. That pitchfork off the highs, not necessarily completely out of play yet, but we're getting the nice move that we were looking for. So recall again, as far as Euro is concerned, what a turn. Big levels of resistance. 1910 is where we maxed out last month. Divergence into the high. Yesterday, you saw that we were attempting, or at least into the Sunday close, to close a trigger below 60, or 70 rather, in daily momentum, okay? And he got it. Keeps the downside in play. Okay, keeps the downside at play. So again, monthly open support was first level 1771. Second level was 1698, the former swing lows, and the objective monthly opening range low for August. We didn't quite get there. Again, this slope we added in the webinar yesterday. I don't know if I want to put too much stock in it. This is also poised to mark an outside day reversal off the monthly range lows, essentially, or just ahead of. Something to pay attention to. Something to pay attention to. Any merit in 1823 resistance level you pointed out earlier in the week? Yes, it was 1822. It's the 618 retracement. It's absolutely massive, Rohan. Okay, let me take a step back. Here's Euro on the weekly charts. 1823. It's the key 618 retracement of the entire 2018 decline. Yeah, I'd say that's important. Absolutely. But Rohan, when we look at levels here on the weekly charts, on the daily charts, and we take a step back, recall that for us to invalidate, for us to call this level broken, I would need to see a weekly close above. So you can see that while the last 2 weeks saw intra-week spikes as high as 119, on a weekly close basis, looks like it never even cracked, right? So yeah, there's a lot of merits on 118.23. Wouldn't put it on there though as like an intraday target to trade on a pivot or a breakout because it's longer term. We've seen a lot of price action here over the last couple of years. It's not going to be necessarily the crazy pivot that you want to see, but definitely there's absolutely critical at 1823 from a weekly standpoint. Make sense? Here's the daily chart again. We did get a couple of daily closes above, but again, slope resistance. Nothing supersedes basic slope support and resistance. So even though, again, on a daily close, we closed just above intraday spike, intraday spike, intraday spike, 3 failures at that slope. Here's the pullback. So look, here's the intraday chart at this point. The lateral levels all remain the same. Okay, we haven't changed any lateral levels. We're going to ditch this slope for now. I just want to see how this pans out. Near term, you're looking at it just as a break of even a descending channel, right? Something real short term, even that looks to have broken, right? 1, 2, here's the break to the upside. So on this recovery, you'd want to see failure ahead of 1876. That's a little bit far out from where we are right now, but that's my near-term bearish inval. Okay, it's the objective high day close that we just registered. If we get through that, you're looking for resumption. Remember, this is in a strong uptrend. No one's fighting that. No one's arguing that. We're just coming off of uptrend resistance, both on the medium term and on the longer term. So what we were looking to gauge was the pullback. What we played last week and into the start of this week was the pullback. If there's more downside, if there's still a larger correction at hand here, look for resistance, look for failure ahead of ideally 1852, guys. But bearish inval's got to be the high day close at 1876. So both levels we'll be looking for. All right. Questions on Euro or DXY for that matter. I was hoping the downward break through 117.71 would see a move towards 116. I was agreeing with you. 116, well, the first level is 1698. So essentially 117 is the first level, right? So Rohan, I typically won't go for a intraday trade, intra-week scalp, whatever you want to call it, looking for a target outside the monthly opening range unless that breaks. You understand what I mean? So the monthly opening range low is basically 17. So as long as I'm in the monthly opening range, I'm only going to target things within that. Now, if we get to 117 and the market has thrust, then maybe you don't get out of the trade. You take a little off, but you definitely go break even or better on your stop, and then you're playing with the house's money, right? Let it run. But on an initial trade, I wouldn't, target outside the monthly opening range unless there's a serious move here. And a lot of these trades, we'll look at a couple different setups today, guys, are essentially going into consolidation. You know what I mean? You're seeing a series of higher lows, series of lower highs. You're sort of getting tight. So you could see this thing consolidate, more sideways movement for a couple of days. This, 4-point touch support line that we were looking at from last month is still, doesn't have any merits at this point. I feel like I just want to scratch this. I don't want to put this here for just to cloud our judgment. Keep your eyes on that. End of the day, you're still coiling within that monthly opening range. All right, like the gold has thrust. Yeah, okay, we'll take a look at gold in a moment. You know what? Let's hit gold right now. Here's gold. All right. What can we say? We should go to all those gold bulls and kind of just say, I told you so, right? Listen, it's not a reversal necessarily of uptrend, but certainly it's the exhaustion trade we've been looking for like days now. We started looking for a move like this back here in 1983. Once that broke, 2032 was a measured target. Our next measured target was 2104. But within the confines of the ascent, you had some really nice slope. Here's the intraday chart. And here's what it looked like earlier into the Sunday open. Right, here's your daily. We had highlighted that's what happened on Friday. You posted an outside day reversal off of record highs. These are scream out exhaustion trades. And I tried to highlight that early in the week, that this is the first sort of major development for a bearish trade, for a reversal for a near-term exhaustion. And that's exactly what we got. Here was the intraday chart. It was coming not only within the confines of just the outside day reversal, even near term, we were coming into this just really simple slopes. Ascending channel formation, 3-point touch, kept the focus on this slope, essentially looking for an exhaustion. If we break below 1983, you look for acceleration. Or you look to validate a larger reversal, towards the lower parallels. Here's what it looks like now. She's a beauty. Snap the levels for you. So there's that channel. Really nice. Here's where we opened the week. I even talked about this yesterday in the webinar briefly, how freakishly 2033 was holding resistance again, which is, again, a measured move. We have no previous historic price action at these levels. Nice, nice, nice. Try to push through the highs, fails miserably. Here's the break of ascending channel support. Acceleration is the move you want to see into 1984, 1983. There it is. If this break is legit, again, I want to see acceleration. I don't want to see things hold up and kind of sit here, right? Especially if we drift back above. I want to see a rejection at 1984. If we do see any type of recovery today, move lower. Keeps your focus on that slope somewhere near 1930s at this point. 2011 comes in at 2011 high, comes in at 1920. So I'm liking it. Okay, I'm liking it. I'm not full on crazy gold bear, but definitely the correction we've been looking for finally looks good. Remember, we got tempted to short Thursday last week. Did you catch it? Thursday of last, no, nope. The reason you couldn't do that last week, Rohan, and I'll give you credit for people who did take it. And if you did take it, honestly, that was a luck trade. Okay, because the reason we didn't want to take that, Rohan, is that there was no major critical resistance we're trading against. This turned bearish on Friday with that outside day reversal. Okay, so make sure that if you're getting tempted to short a rally, Rohan, that if you're getting that FOMO and you want to kind of jump in, make sure it's based on technical merits always, always. He says, yep, no technical, exactly. Man, and I was there with you. I didn't think that this thing, I didn't think this thing could. I was looking for exhaustion. I told you into 1984 even, and then the thing plowed through there. So what we think, what we feel has to that doesn't matter. It has to be based on merits and price. And Friday's outside day reversal was the first tell. The break of this ascending near-term channel was the second tell. If we do get a close below 1984 today, it would keep the focus lower in price. All right. One more thing I just love to add on these things when we see these moves, guys, is super objective things. Not Mike Boutros' opinion, not Jamie Setley's opinion, no one's opinion. Fact, that's the opening range low for the month, 1960. Okay. So even if we take this on a basic monthly opening range trade, here's your monthly open, you set a low, didn't really test it yet. So that's my problem with it. You set a high in the first 6 days of trade. Here you are testing the lows. If this breaks, might be a nice move. Might be a nice move, but just know that right now you're basically testing the monthly range lows. Rohan says we are holding resistance on SPX. Does this reversal in gold indicate a breakout in SPX? Again, don't correlate the two, okay, in such a way, especially inversely per se, because they've been rallying together, Rohan, right? SPX has been moving up and so has gold. So I'm not really understanding the premise of your question there. If gold holds, or if SPX hold highs, yeah, you'd expect to see actually a supportive move in gold, but they're moving together right now. Let's take a look at dollar peso, and then we'll hit SPX in a moment. Here's peso. There's a lot of interest in this. I published a piece on this yesterday on Daily FX. It looks good, guys. The first move's already down, so the weekly open gave way yesterday at 22.3643. Here's your first level of significant sort of initial support to look for right now. Very similar scenario. Here's your monthly open at 22.589. Here's your 618 retracement of the advance off the low you made last month. That's 22.2547. And it's the objective monthly opening range lows right here. So you got two major levels for peso right here. Let's call it 25.50. Break blower, you're looking for this key region. Longer term 618. That's the zone that faked us out with the break last month, which is why I'm kind of pissed at it. But if we do get there now, especially over the next couple of days, you'll see that upslope support converges there as well. Look for a break there, I think, to validate a larger move lower in peso. Till that happens, guys, the initial focus right now is on a reaction to the US trade session right here. And if that breaks, that's your last limit. Okay, that's your last limit. I want to see a larger reaction here, more definitive, either price break or rebound for us to favor any further movement in dollar peso at this point. But looking good. Looking good. Here's what peso looked like into the start of the week. Remember, we adjusted that upslope. Said looking for failure, resistance at the 50, bearish inval at the 618, a break here. You're looking for a move on the August open. That's what we got right now. Key support still right down here. Still right down here. Questions on peso. Now, if you get really granular with this, and I know some of you love this, so I just wanted to kind of put this out there. This does seem to have completed at least some sort of near-term, it could be a near-term consolidation, something like this, right? A little wedge pattern. In which case, guys, if it gets super granular and you're trading like near-term like this, a measured move of just this consolidation takes into like 22, which is why I'm looking lower while below the weekly open. I think it looks good. Okay, so that is peso. Okay, Let's hit SPX real quick. Number 5. Here's what the S&P 500 looks like. So I wouldn't necessarily say resistance has held. Look, this is the level that we were talking about earlier in the week. Yeah, this is it. Was right here. This was last week as we were breaking that January high right here. So we ripped into 33.87, 33.97, which is again the swing highs here, and that failed, pulled back, kept you still above slope, the median line. Here's the open of the week, a little messy, right? Here's this last stretch. Look, I don't necessarily have us at resistance right here, Rohan. I think, you know, levels, it's the same levels we were talking about early in the week. So 33.87 is the high close right here from January, or was that February? And then the actual stretch high is right here at 33.97. So is there, risk for capitulation, for a little bit of a pullback, for a resistance snap here? Sure. But on the march of this drive, the fact that you're still, you're basically breaking to overbought condition at this point. And then you just got further stimulus or, whatever executive decisions coming down the pipeline. I don't know. I don't know if you get it. I don't know if sentiment is there to kind of receive the pullback, but I'm still not buying into resistance. Can't do it. So Rohan, I don't really know. I don't have a move here, man. I tell you when I do, and I tell you when I don't. At this point, if this pops, if this breaks 33.97, you're probably going to see a radical acceleration. Radical acceleration. Why? Well, it's a major resistance level. There's confluences up there. There's multiple high closes and high swings and upslope resistance. Same exact tendency that we always talk about. A breach of upslope resistance can oftentimes be the biggest rip of the move. So I'm cautious here. I again, pistol to my head. I think it spikes and fails again, but hey, we'll have to play it as it comes. There's nothing here for me except to look for an exhaustion. If it breaks out, it breaks out. I'm not going to chase. Makes sense? Plus, guys, we don't have any measured moves beyond here. We're going to have to reassess. It's all slope beyond 33.97, essentially 34 handle. So something to keep in mind there. All right, so that is SPX. Number 5. Number 6, let's take a quick round back to sterling. Here's what British pound looks like. And here's what it looked like last night. Again, that slope we threw on doesn't look like it wants to hold. Okay, it doesn't look like it wants to hold, but it's one of those trades where we're still right in the slap in the middle of the August opening range. You're sitting right above the August open. I'm going to ditch this slope for now, but for the sake of clarity, but the larger trade is still pretty darn clear. Here's what it looks like. Well, let me just show you in the daily chart first, or the weekly. Here's sterling on the weekly. Confluence resistance right here at 130.70, 130.80. Okay, you're looking at the high week close for the year. You're looking at the 786 retracement of the decline off last year's highs. You're looking at basic parallel resistance, right? We're right there. The next major key lateral levels of resistance that I've been talking about for so long is 32.50. That's the objective yearly open. And 33.11 to 33.35. That's the 100 off the low. So that's 2 equal legs up. And that's the 2019 high week close. Nice confluence zone. So the levels are clear, but it's one of those trades again where you're so stretched, you're into resistance, you're checking upslope resistance. What are you gonna do? Buy here? So there's nothing here for me yet. I'm trying to get a pullback so I can get a decent position. Point fact is earlier in the week or just yesterday, you did have a position or an opportunity to get back in if you had the foresight, but I thought that the correction would get a little bit deeper than this. Here's what it looks like on the daily chart. So that same pitchfork we've been following, real steep, not really typically a fan of these very sharp, acute moves, but here we are. Resistance at the median line, resistance at the median line. Didn't quite get that probe into 32, 32.50. Here's the pullback holding slope resistance. Look, you're going to get a divergence point if this thing pops higher again. I think you still have the risk of going into this zone, but the whole point is you're still looking for exhaustion. Also could be a point where it's a 1, 2, 3, kind of truncated 4, and then you get a 5 before correction. I don't know. For now, it's in contraction again within the monthly opening range. You're seeing higher lows and lower highs. Here's what it looks like on the intraday. On this, you kind of just zoom it out and focus on the pitchfork that we've been following off the lows. Looks still pretty clean. Okay, this is the 38.2% line. Oh, excuse me, the 618% line and the 38.2 are what's highlighted here. Excuse me, the 38.2 and the 50. Geez, it's only Tuesday. Okay, here's it goes. So we're right there. You know what I mean? Here's the rebound. We're checking the 618 just at the near-term pullback. You know, I favor a deeper cut before a resumption, but at the end of the day, if we breach this key zone 32, 32.50, you're looking for that move towards the median line again. Contraction in volatility seems to be the themes. You know, a lot of times we just talk around the desks in the city. A lot of these guys we have just ongoing group chats that go, and when you start to see red flags and people starting to say, hey man, volatility is contracting, it's been contracted, that's true. Keep in mind a couple of things. It's the summer doldrums. You know, this time of year is not unheard of for us to see reduced liquidity, reduced volume, reduced trading activity overall. But the longer this contraction in volatility holds, the bigger the breakouts. And while I would argue, some people say, man, contraction, ATR is, look at ATR, Mike, it's been ridiculously tight. That's true. That's true. But contraction in ATR and reduced volatility doesn't mean there's no trades, guys. We've been in a trending market. You look at euro dollar on a daily standpoint. Yeah, the ATR is tight because every day's range is not that big, but it's been a singular march nonetheless, right? So people tend to confuse volatility with opportunity. And while more volatility typically will breed more opportunity, just because the ranges, the ATR is not that big, doesn't mean the trade's not there. You could be in a forward march in a one directional trade for weeks and move 10% or so, but the ATR is going to be small because you're on a steady pace. So we always just a caveat to put out there on some of these trades. Okay, so that is sterling. Next up on tap, a real quick look at dollar yen, number 7. Here's Yensky. Okay, nice resistance hold. The big focus, or well, at least what I wanted to highlight as we came into the start of the week, was this resistance right here at 106.10, 106.17. It's the 50% retracement of the drop. It's the 2019 low day close. But into the start of the week, you also had slope there. A basic 3-point touch, which confirmed itself yesterday with that red line, and then the parallel here for the pitchfork we've been following off the highs. Resistance, resistance. So look, dollar yen for me, recognize who you're playing with here. At the end of the day, this is a very clean weekly opening range right below resistance. If we breach 106.65, that's the level to focus on. 618 retracement, former swing lows, slope resistance. It's either exhaustion there, or if this thing breaks, there's a much larger turn at hand for dollar yen. Okay, keep in mind that your monthly opening range is just pips below that. So that's sort of the plan if this thing breaks to the upside. All things held constant, the immediate focus is on a break of monthly open support 105.75 or that 106.20 region is resistance. Dollar yen. Next, dollar CAD, picture perfect. I hope someone caught this. What a move. What a move. So even into the start of the week, dollar CAD has been something we've been following pretty closely. Bring your attention again to the weekly charts. Massive area of lateral support, really absolutely critical. Looking for the rebound. You got the rebound a little bit, but that rebound was coming into resistance right into the start of the week at the August open. That's 134 at downtrend resistance. Basic slope. Basic slope. So you're looking for a reaction here. If you break out, then you're looking for a reversal. There's actually validation for a larger move. But right now, you're at downtrend resistance. You're looking for a pivot. Here's what the scalp looked like since the start of the week. We looked at this yesterday in the webinar. I was telling you guys to focus on this range right here, 33.15 into 34. Basically got the August open. You got, again, channel resistance, slope resistance. Then here, you got a nice little plethora of fibs, the June low, and a nice pivot in price. So here was the break. Quick mark, 32.70. We're there now. I'm done. I'm done. Remember, we're coming off of huge weekly support. I don't want to be playing shorts beyond here unless this breaks out. We've gotten multiple tests and false breaks on an intra-week basis. So remember, we need the weekly close to confirm, or at least a daily close. But that was the first level, 32.30, 33.22, and then 32.70. We hit 32.70. Here's the rebound. If this is going to hold, okay, and it really is heading lower, we want resistance right here. Okay, if that breaks, I'd probably be putting near-term bear. I mean, if you want to play a little bit closer to the chest, something like this would be your sort of bearish inval or your stops if you're holding anything northbound. But on this initial stretch, if we are heading lower, you kind of want to see resistance at 33.27. Okay, so that is dollar CAD. Any questions on dollar CAD? Can we cover Kiwi thinking of shifting against 66? I think shorting you meant against 66.28. Yeah, here's Kiwi. It's next on the list actually. Number 9. And this is actually the last thing I have. So if you guys have any questions, throw them on there now. But here's Kiwi. Again, 66.28. I mean, that is the level. That is the level to trade against. But the only thing is, I don't like how it's holding this slope really clean. Basic trendline support off the low. Now they only have a 2-point touch here, so until this actually touched, it doesn't mean anything. It's just speculative. But yesterday when we grounded there, another test. It looks like we just tested it again. I need a stronger signal. I'm with you. I actually do think it moves lower. I think you get 65.50. My humble opinion, not a trade recommendation per se, my humble opinion, but if you're not already in it, I can see the rationale behind it. I'm trying to think where your stop would be against the highs, but it's too tight because you haven't actually gotten a tag of 66.28 yet. So listen, I would play this all of these guys, all of these trades. He says I'm in from where we are right now. Yeah, I mean, if you're in from where you are now, that's where your stop has to be. I wouldn't put it any further out. That's fine. That's fine. But on all of these trades, guys, all of them on their face value have done nothing this week. Very tight coiling opening ranges. So sometimes it just pays to wait for these breaks to give you the validated directional bias. All things held constant, yeah, man, Kiwi's coming off big resistance. If I had to put a pistol to my head and tell me which direction, I would say lower. False, I mean, it could be a false break. We don't have validation yet. This is a multi-year downtrend resistance, but nonetheless, break did not feel acceleration, did not clear the yearly opening range highs, didn't even clear the yearly open, let alone the opening range highs. So yeah, I think the exhaustion trade will happen here too. Want to see some DXY strength. I want to see the DXY start to pick up the pace here. All right. Questions on anything that we've discussed here today, guys? Sorry, I'm tight on time, but wanted to get this out. Quick reminder, appreciate and welcome all your prayers, guys. If you haven't heard yet, the floods that hit St. Louis really devastated Jamie's house. You know, he had a foot of water through his whole house. So thank God him, his family, his wife are safe. But you know, your prayers are more than welcome. He should be up and running from a SB standpoint, hopefully soon. You know, he's obviously having to relocate, and there's a whole lot of I can't even imagine, guys, kind of devastation you see when your home is wrecked like that. But your prayers are welcome, and thank you for all your kind remarks and emails. I've been getting those as well. Hopefully, Jamie will be back in any day now, and we'll get back up and running. Till then, best of luck trading. Keep in mind, guys, as far as the economic docket is concerned, heading into tomorrow night, or excuse me, tonight, tomorrow in Australia, you do get Westpac Consumer Confidence Index, but also in New Zealand, you get the interest rate decision from the RBNZ. Obviously expected to hold rates at 0.25%, but devil's in details as always. Tomorrow in the US, you get that core inflation rate number, which again should be quite interesting, expecting a read of 1.1%. And that should take us pretty much into the Thursday. We'll cover things again ahead of retail sales on Friday here in the US. Thanks again. Best of luck trading, guys, and I will see you on Thursday. Cheers.